Hey, welcome to the Closing Beat, everybody. Happy Wednesday. It's Wednesday. Hope you're having a great day here so far. This is called the Closing Beat, just a quick show that we do to cover the stock market, the good, the bad, and the ugly for the day. We'll cover all of it and give you some maybe interesting stats along the way. I know you guys like those. We're financial advisors here at Jazz, so we manage long-term retirement accounts. We hope you'll keep us in mind. Thank you to all of you who have kept us in mind. You've transferred accounts, IRAs, Roth IRAs, things like that. Long-term investments we focus on here. Our goal is not only to just manage investments, but is to teach you, to help you grow, help with every aspect of your financial life. And I really appreciate all of you that have given us a shot there. If you want to play a game with us and you say, well, I don't really need you for that, I'll just play a game with you. Go to jazzwealth.com/guess the Dow. And if you can tell me where the Dow is going to close next week, closest without going over, we'll send you a $100 gift card. And if you're one of our customers, like our winner last week, Mr. Enrique, we will credit your account $100. It doesn't matter if you've already contributed for the year to your IRAs and things like that. We are certainly happy to do that. So go play the game. See what you think there. Tomorrow night, we've got our weekly class for clients. Every Thursday night, we do a class brought to you live from our new Speakeasy. That is our Studio 3J here. It's a bar. It's an official working bar. We always tell our customers, come on over, grab a glass of wine. If you're watching online there, grab your favorite drink. Sit down with me here for just a few minutes. I'll teach you something new, something really detailed. Tomorrow's topic happens to be on trading plans. I have taught thousands of people all over the globe how to do the active trading, and we have a lot of customers that like to do that on the side. We manage the retirement accounts, and they happen to manage their short-term investments. Well, you got to have a plan. If you don't have a plan, you will not make money. So tomorrow night, we'll be joining you there in the Speakeasy to go over trading plans and give you some detail on that to help you get started, because we want everybody to be successful there. So that's that one. Well, that's enough of what we do here. Let's talk about the stock markets today. You got 117 points on the Dow, 9 on the S&P, 27 on the NASDAQ. The Fed cut rates again, right? The rate probability analytics there were not wrong. We talked about this yesterday. 100% of the time when they are over a 50% chance of them cutting rates 1 week out, they always have. They've been 100% successful, so that 100% win streak continues there for the rate probabilities. Fed rates cuts rates by a quarter point. Verbiage changed, right? They said the last couple times they've said we will act as appropriate for whatever the economy has in store for us. They changed it now to, instead of saying act as appropriate, they said that they will assess the appropriate path. So that's a fancy way of them saying, hey, we're done cutting rates, right? That's it. Just get over it. It's also a fancy way of them saying, stay tuned, right? Who knows what we may say when we go out on these Fed speeches and all of us spread out all over the world and give our speeches. So it really puts them back in focus to kind of keep an eye on their language. And if you don't know this already, there are a handful of tools out there that actually track the words of the Fed, every single one of them, whether they're voting members or not. And when they change one single word, it'll highlight it in red, and it'll talk about how many times they said it and then calculates probabilities based on that. It's really intense. I mean, there's a lot of that out there, but people watch literally every word that they say. So those words changed today. Also, Mr. Jerome Powell in the press conference there, he said, look, we want inflation, right? They cut the rates. They're like, inflation's too low. We want people to go out and spend money, and we want inflation to be higher. And he said, we will not raise rates until we see a significant rise in inflation. So I don't know what else you need. That guy clearly wants inflation in the markets there. They want you to go take your money out of your savings account and go spend money, go buy a house, go buy a car, go do all this great stuff, go shopping for the holiday season. And that was made clear today with the Fed decision there. Now, I found it really interesting. If you don't know, I watch the market all day, every day. I don't miss a thing, right? I treat every one of our customers' money as if it's mine. And so if it's my money, I'm staring at it all day. I want to know what's going on. I don't have hobbies. I'm sorry. I'm always here in the studio just paying attention, usually in that seat right back there, watching every single screen. And I found this really interesting. I want to share this with you real quick. Yesterday, we gave you the stats that when Jerome Powell gives his announcement, the market averages a negative 0.25% decline. All right? That's the average. When the markets fall, average is 0.25%. Any time in history since 1994, which is when they started announcing their rate decisions publicly, since then, anytime they cut rates, the S&P is higher by an average of 0.37%. I want to share something really interesting with you here, because these stats are just not a fun way for me to share numbers with you. This is really, really interesting. We're going to go over to the S&P 500, and I'm going to go to the 5-minute time period to really drive my point home today. Let's take a look. If we go to the opening price to the low, right after the Fed made their announcement, the low price, I want you to look at the box that's popped up there and go to the 5th line down. You got number of days, hours, minutes, and bars. That 5th line down shows you the percentage that the market was down at this very moment when the Fed made their decisions. Down 0.25 or 26%, right to the average. It stopped right there. Why? Because the computers know the average is a 0.25% decline. Therefore, there's nothing to do after that. There's no reason to sell more and try to make money on the downside or nothing. If we then go to the upside here and see where the market stopped, right almost perfectly, 0.37%. You can see that when it got up there into the 0.4% area, it lost all mojo. It lost its steam, right? Why? Because that's the average to the upside when the market actually cuts rates, or when the Fed cuts rates. So don't think that we're the only ones watching these stats here. That is incredibly fascinating to me. And I was watching second by second going, oh my God, is it going to stop right here? Look at the volume drop off. You could see it start to dwindle down once everybody knew, well, that's basically what the Fed day has in store. The active traders, the automated algorithms and things like that. Very fascinating. If you want to go back to our video yesterday, I explained that just so you know I'm not blowing smoke, not making up stuff. That is the actual stats. And once again, the stats like that just so dialed in. It's incredible how everyone who's somebody and actually doing things like this, well, a lot of things with money, they know these stats and they respond to them. You got to know this stuff if you're going to be an active trader. It all starts with a plan, so we're going to cover that tomorrow night in the Speakeasy, of course, but that's it. Also, if I could share with you real quick, this is CNBC's data. I did not come up with this. Bloomberg? CNBC. They pulled the data to say, okay, what happens when the Fed cuts rates 3 times in a row? This is now the 3rd time in a row they've cut rates. What happens if they continue to cut rates? What's the market do? And what happens if they pause? And what they found was that when the Fed cuts rates 3 times in a row and then pauses, the markets actually do really, really well. So between 95 and 96 was the last time they cut. Well, second to last time they cut 3 times in a row and then paused. They didn't cut after that. And 1998 was the last time that they did that. If you look at the 1-year performance, you got 24% and 19% respectively there for the S&P 500. So there's not a lot of data to go on there, but it's kind of interesting to see. When the Fed cuts 3 times in a row and then they're forced to cut another time, meaning economic conditions deteriorated and they have to cut, then more than 3 times in a row, the average performance, this happened 2 other times, minus 12% and minus 42%. So not that you're going to use that to make decisions, but you just kind of hope that they don't have to cut rates again, because it doesn't really look good in that respect there. So just sharing some information with you. I hope you like that sort of thing. Let's take a look at the markets here and then get into some of the goods. You got the S&P 500, of course, sitting at record highs there. Good day, and now you know the stats, the averages, and everything in the like. You've got the Dow moving back towards those highs. It was held back a little bit because of some of the earnings from Caterpillar, 3M, and names last week, starting to recover from that. And the NASDAQ actually moving back to highs there as well, looking pretty good there in the short term. So not bad there. You've got earnings season still well underway here. Of the names that have reported earnings, you got a 74% beat rate. That's the headline number. That's actually pretty good. It's getting better. The negative number, which is creeping up just a little bit, it's getting a little more attention here and there. They follow this too. Anytime you look at a company's earnings, you kind of want to look at their earnings, their revenue or sales, and their guidance. And everybody that's more active tends to say, you know, guidance is really the exciting part. And we said before earnings season started, this season, guidance would be the big focus. And unfortunately, if you look back to last quarter, out of all the companies that reported earnings and, of course, give guidance, 11% of them lowered guidance. That's about average. It's not too bad. If you look this earnings season, which we're still in the middle of, we're not done with this earnings season, we're already at 12%. So there's been an influx of companies lowering guidance going forward that are not very excited about the future there. That's one little bad sign, the sort of rumblings under the surface that people will probably start to gravitate to if that number goes to 13, 14%. It won't probably go much higher than that, given how many companies have reported already, but something you may want to, we're probably going to keep tracking that there for you, just to keep an eye on that. Also, economic data, you had payroll numbers came in better than expected. ADP reported 125,000 jobs added in October versus the 95,000 expected, and your preliminary GDP number also came in better than expected at 1.9% versus 1.5%. I don't know if you like the econ numbers. I happen to see them, so I point them out. All right, sector-wise today, you got crude oil moving lower, 1.15%. Every Wednesday, unless Monday is a holiday, they report crude oil inventories out of Oklahoma, and inventories rose by 5.7 million barrels. We were expecting a drawdown of 2.7 million barrels, so a big difference there. And that number, typically they're way off. I don't know who analyzes this, but they usually don't get it very right. So a big spread there, and because of that, lots of more oil in the economy or in demand, and you see lower prices, just like anything else, right? The more there is of something, the lower price it is. So crude oil a little bit lower on the day. That was probably the weaker area of the market, and crude oil stocks that a lot of them had little bumps here over the last couple of days, so they took a break today. You had banks and semiconductors. They were a little bit lower headed into the Fed announcement. They finished the day lower as well, although bank stocks got a little bit of a boost there after the Fed numbers came out. They still finished basically flat on the day. Semiconductors, we've been talking about being a little extended. They finished the day just a tick higher. I said lower a second ago. They finished a tick higher, still extended in the short term. You can feel it, right? It was like, okay, good news for these things to move higher, but they didn't have the juice to get up there and get going. So that's that one. What did have the juice was healthcare. Been pointing this one out here, more and more people getting bullish. People making the argument that Elizabeth Warren's poll numbers going down may be helping this area, because remember, all this was because of Elizabeth Warren and what she wanted to do, and Bernie Sanders as well. And so anyways, you got a lot of settlement there from the opioid cases that have been going on. You also have earnings that came out really good for Pfizer and Merck and things. So this sector is actually doing really well. Overbought now in the short term, but still looking good there. Home builders, remember, they got a little bit overbought, and they've been pulling back ever since then. That's okay, right? When this happens, you don't mind, you just don't want to be the sucker that buys at the top. So you got to know when stocks are overbought, or sectors, or whatever you're looking at, so that you can understand what's a fair price to pay. And so home builders is a little bit lower today. If we dig through a little bit, got Pulte Homes. Remember, that was just on the new 52-week high list day after day after day. It finally pulled back, took a bit of a break. Toll Brothers pulling back as well, although it wasn't really that extended. Lennar, all the names, you know the names. Pulling back there, back to a point where it can attract people and say, well, great, I didn't have to pay 62. If I can come down here and get 59 or something, you've seen a little bit of buying attraction there. So that's that one. All right, let's move on here. I'm using paper today. Yum Brands, they missed on earnings there, down 6% on the day. So these guys are Taco Bell, Pizza, well, Yum Brands America is Taco Bell, Kentucky Fried Chicken, and Pizza Hut. So Kentucky Fried Chicken doing well, Taco Bell doing well. They got a new partnership with Grubhub to deliver for all their stores now. But Pizza Hut saw the weakness there. So if you could look through the different brands that they own, Pizza Hut was the weak area, and a lot of people have been seeing growth in Pizza Hut because of what happened to Papa John's and those unfortunate things that Mr. Papa John said. But since then, people have returned back to Papa John's, and they're starting to do a little bit better. And so Yum Brands, their Pizza Hut, not seeing so much of a good move there. Although it did close off lows today, still down about 6%. Molson Coors, ticker symbol TAP, if you want to look it up. They were down 3% on the day as well. They missed on earnings. Revenues came in a little bit weaker. They announced a restructuring there as well. They're going to be cutting about 500 jobs, or I think they said up to 500 jobs. And so stock a little bit lower on that news. Garmin, we don't look at this one often, but it's doing well today. About 10% gain on the day. They beat on earnings. Revenues were better than expected. They raised guidance. One of the main focuses here, if you look at their balance sheet, was profit margin. They're better than expected on profit margin. I think they got like a 3-point bump in their overall profit margin. So looking good for them. Stock well-deserved 10% gain on the day. Only better than that was Mattel. Back above the 200-day moving average, ever so slightly there. 14% gain on the day. They beat on earnings. Revenues were good. Now, this is the company that was looking in, how'd they say it? We're investigating our own finances. Rather than have them get in some kind of trouble, they were like, we're going to look into it ourselves. This is months back, maybe at the beginning of the year. And so they were going to look at that. Their CFO has resigned, and they said after their investigation, it's now done, they are going to be restating some of their previous earnings, trying to get ahead of the game there. So that's the negative. Now, if you look inside the brand, you got their doll business, Barbie and the like, up 5% there. Their overall gross margins were up about 4%. So again, profit margins looking a little bit better there. And their, what was the other one I like to look at? Action figures, right? Believe it or not, that's not in the doll category. Action figures and games, that's what it was, up 12%. So all things looking good. And their vehicles actually up as well. I actually didn't know that. I was looking at that, I'm like, vehicles? What in the world are we talking about? These little battery-powered cars that you drive along. They're like Barbie-powered cars. Oh, man. God, did I want one of those when I was a kid. I wanted that Jeep. Never got it. It didn't happen. Anyways, 69% of the S&P is above the 50-day moving average. Slight uptick there, understandable for today. You got 57 names within 2% of crossing above the 50-day moving average. That's a lot better than where we were. Remember, we were at 59, 69, 76 yesterday. We've now seen a bunch of those names jump back up into that category of being within 2% of getting above the 50-day moving average. You got 21 new 52-week highs today. A lot of the same names if you're looking through them. Sherwin-Williams, just a nice and steady uptrend. Talked about that one yesterday. You got some REITs. Everybody loves Realty Income. That one's plugging along, doing well. And Kimco also broke to new highs as well. There was a couple others, little lesser-known names. So a decent amount of 52-week highs is the bottom line. That's the takeaway there. We've seen a string of 30-plus stocks each day here. So a little bit of a downtick there, but overall not too bad. The new lows today, you got C.H. Robinson. It's a transport company, by the way. They're just talking about their global slowdown, so not good. If it was a bigger name that reported this, it'd probably be a bigger deal for the overall market. But CHRW down, well, it's 15% on the day. That's earnings and them talking about things slowing down a little bit. Owens, Illinois, hitting lows again. That's from earnings yesterday in the downgrade. Analysts had a stock price of $8 in the next 12 months there. We're basically already back to that. And then you had the same, I haven't been following these, but Viacom really starting to roll away to the downside there, and CBS, same sort of picture. I'm just not keeping up with the news on them. I don't find it very interesting, so I haven't followed along there. TRV, that's our stats play here. It's got one more day to go. Not looking good. It's got to get back up to this line here. Although today was good, and I love how extended it is for the bulls to see that as an opportunity in the short term. I don't see it having a monster day tomorrow. We'll keep track of it and see what happens, but that's where that one is. Philip 66 and Valero finally pulling back. These were those extended ones yesterday that we talked about. I was just impressed by the moves. Today, people coming and taking their profits. So maybe some people were watching the closing beat and they said, you know what, I'm going to take some profits on that thing. Or short it, I don't know. So stock, both of those a little bit lower on the day. It helps that the oil inventory numbers were negative pressure on the overall sector, but that's what you have there. Apple reporting earnings after the close here. As expected, they beat on earnings. 86% of the time they beat on earnings. We talked about that yesterday, so not too bad there. Right now we stand at 248.30-ish. So that's going to be 2.09%. That's well within the reasonable expected gap for this stock tomorrow. I bet you it pulls back just a little bit, but Apple a little bit higher after earnings here. You're looking right about there, very close to highs. So we'll see what happens there. Uber had a good day today. That stock continues to rebound off lows. Most analysts are bullish on that one. And Lyft reported earnings as well. They beat on earnings and they raised their guidance. Let me make sure, because I just got some sloppy notes on that. So trading out about 44.60, small uptick after hours there for Lyft. They did beat on earnings, did raise their guidance. A whole lot of comments there. I don't have time to go through all that, but them talking about they're not focusing on trucking and delivery and things like that. They want to be sort of a different animal there, it looks like. We'll cover that maybe tomorrow in more detail. Facebook reporting earnings as well. They're trading outside the range. This is what we talked about yesterday. Really, it's like if you own it, you want it to do well, but you really just kind of wanted it to get going outside of this range here. And right now, we're trading, let's call it 194 to keep it easy. 194 puts you above that range. If that's where it stays going into tomorrow, you'd expect a hint of short covering and a little bit more excitement from the short-term traders that have been waiting for the all clear to go ahead and buy that stock. So good job there if you own it. Your patience in waiting over the last couple months may be paying off. We'll follow up with that one tomorrow, see what we can do for you. And Netflix also a little bit higher, working off the earnings gap there. Looking good, about 3.6% there. The news that kind of helped them today was AT&T priced their HBO Max program at $14.99, and people just viewed that as not very competitive against Netflix there, so the stock did well. A lot of people are thinking Netflix got a lot of competition. That's why the stock's been dropping there over the past couple months, but most people looked at HBO Max today and said, yeah, you're not really going to attract a whole lot of people with that to come running over from Netflix to HBO. Tomorrow you got earnings from Avon, Clorox, Estee Lauder, Kraft Heinz, Altria, and Western Union. You got Hasbro paying out 68 cents, Paychex paying out 62 cents, Signet paying out 37 cents, Casey's General Store paying out 32 cents. We own a handful of those names, so some dividends coming your way there. And that's about all I got for you. Yeah, so I'll take your questions if you happen to have any. We'll see what we can do to help you out, and we'll go from there. Yeah. All of your stocks were up today except for Bank of America. Can't win them all. It's okay. You want Bank of America to pull back. You don't want them to go up every day. Right? If they go up every day, you lose interest from the buyers, right? So Bank of America has pretty much gone up every day. The further it does that, like Bank of America or Valero and things like that, you start getting more people saying, well, rather than chase it, I'm going to wait. And that causes the stock to slow down. So you'd prefer it goes up a little, down a little, up a little, down a little. That keeps people emotional. Yep. Cool, cool, cool. I love it. So the question is, why is XLU, I can do that, why is XLU up when the market is up? So it's not always inversely correlated to the market. If you're building a portfolio or doing something, looking at this, you want to look at the correlation between that and rates, right? So as rates pull back a little bit, that helps the utilities. With the Fed cut announcement today, rates did pull back. We didn't cover that actually, but bonds, the rates pulled back a little bit. That helps utilities because they're basically all debt. So looking good there. Yep. Why is VR, is that, what is that? That's the mutual fund though. That hasn't priced yet, has it? I don't think it's priced yet. So you can't actually have any real data on that. What time is it? Yeah, it probably hasn't priced yet. 5:30, I think. Cool. Gotcha. Do you think Twitter's trading at a discount? Do you think I mean, let's just hypothetically, you got your eye on something, and what has it been? Not even 2 months. Let's say it's 2 months. You're like, I really want to buy this thing, man. I don't know, whatever it is, something that you really enjoy. Like, I really want to buy this thing. And then you come back 2 months later, and it's 35% cheaper than where you wanted to buy it, possibly, somewhere in that range. So if we go over here, you're like, I can't pay this $45 for Twitter. But 35% lower, I think a lot of people would argue that's a discount, right? That's a pretty good discount there. Yep. You think utility, well, you got a weird mix. So the question is, do you think the XLU, XLF, and basic materials there are weak and make the market come down? XLF, I would agree with. The other two, you're not talking about such a serious weighting on the market. They can have bad days and not really affect anything there. So that's it. Yep. Brother behind the bottles of booze. What's that? Try a mirror. I'm not sure what you mean there. I like where you're going with the booze, but I don't know about the mirror. Finally catching me live. How can someone open an account right on our website? You go to the website, click Invest Now. We will, that basically gets you started. We'll take you from there and get the ball rolling. Thanks for thinking of us. Yeah. I love it. Twitter's a dumpster fire. Yep, for every bull, there's going to be a bear, that's for sure. Well, in a short term, you could also say, I mean, no doubt, that's the type of discount that you don't expect to come back tomorrow and see it priced fairly again. I mean, it's been beaten up, so you got to understand when you look at discounted stocks, what are the ones that are discounted sort of out of favor, and what are the ones that just got hit with a hammer? You know, that there's a big difference in terms of recovery. Yep. How high can the S&P climb, in particular the SPY? You're looking at a big gap, 295. You like that gap fill there? Yes, people believe that. I mean, that at some point, all markets fill all gaps, or all stocks fill all gaps. We'll see. Fresh new highs. Sentiment's really strong right now, so you got to need something to change that. Maybe a weak round of earnings next week or something like that. Am I dressing up for wine and wealth tomorrow? I am. I thought about what I want to be. It's not, and I might have something extra planned for that, but I was going to dress up. Sort of a joke. I wouldn't know on the probabilities there. It'd be a tough one. We could have to do some research. What do you think on Square? Square's kind of like Facebook at the moment, just the other way around. Flat, right? It's just kind of dead money right now. It's very difficult to pick the next direction or to get excited about being long the stock in general. So it's a very difficult one. Anytime you pull up a stock, remember, I don't know if you're an active trader or investor or what you're doing here, but anytime you look at a stock and for 2 months it hasn't really moved at all, you have to anticipate that you're investing in something that's not performing. It's dead money. And so I want you to pretend that it's me that gave you the money. And I said, go invest. Just do the best you can. Go invest in whatever you want to invest in. You now have to justify to me why you bought something that's flatlined. It's not moving. So there's got to be a good explanation there, some research or something you feel confident on. That's the way I want you to look at that, because it's very easy to get sucked into a stock that's sleeping at the moment, and when it wakes up, it drifts a little bit lower. You don't want that. It'll be a tough one there. I love it. I love it. Oh, my bar needs a mirror. I gotcha. Yeah. The only reason there's not a mirror is because it's a studio, so the camera actually goes over there. So I don't know that there's a need for a mirror, but I see what you're saying. I think it needs a TV, to be honest with you, over in the back there. A couple wingback chairs. Come on, man. Be a cool place to hang out. I love it. All right, I think I've covered everything. I mean, that'll do the trick. It is back to work for me. I really appreciate you guys watching, following along. Hope you learned something. That's the goal. Teach you something new every day. And for our customers, we teach you something even more detailed every single week. By the way, those classes are all recorded. So if you ever happen to join us and we do become a good fit for you, you don't feel like you missed out. You're going to go back and just watch hours and hours of wine and wealth classes and learn all the geeky stuff that we talk about here. We'll be back tomorrow, of course, to do this all over again, and enjoy the rest of your day. Thanks for watching.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.